This video is how to set stop loss and take profit orders when you're trading crypto on exchanges like Bybit or Binance. I'm going to show you exactly how to set the stop order step by step, what a stop order actually is so that you know how it works, and also 3 different strategies on how to choose where to place your stop loss and take profit orders if you have them. Timestamps for all of that down in the description. When we enter a take profit and a stop loss order, we're actually entering the exact same type of order, which is a sell order. Just the price dictates whether we're either taking a profit or taking a small loss. And so I'll show you that now. Come onto your trading system and choose TPSL, otherwise known as conditional order or maybe a stop order. So you can look for that. I'm going to show you on Bybit right here. Check the link in the description to a deposit bonus on Bybit. If you're a trader, you can get up to $4,000 as a deposit bonus there. So check the details via that link. But I'm going to show you right here all of these details that we can put in, the trigger price and everything. What exactly are we telling the system to do right here? Well, we don't want to use a limit order for a stop loss. It's not going to work because if we tell the system using a limit order, sell BTC with a limit of 96, and the price is trading at 98, it is going to immediately sell because our limit, our lower bound is 96 and the price is 98. So that's not going to work for us. What we want to do is wait until the price gets down, and only if it reaches that price, then execute the order. And so we need a stop or a conditional order if and then. So if the price gets down to 96, then sell my Bitcoin at this level, which is a stop loss. Now, on the other side, you can do a take profit for that as well, although it's not necessary when trading in the spot market, because if you have a sell order, which is a limit at 100 and the price is 98, you're not going to sell any at 98. You'll only sell it when it gets up to 100. So you can use a limit order in that case, but we can have a look at the differences here. So a stop loss, you're saying sell at 96 only when it gets there. So not here, but down here, that's only when the order comes in. So this is a conditional order. It must be, the take profit would be, if the price gets to 100, then enter my sell order. Like I said, with a take profit, if you're just long, then you don't need a stop order. You can just sell at a limit price above and choose that. So I'll show you how to do that. But you can do this as well with a conditional order. So conditional orders really only trigger at a certain price that you choose, and then you can choose the type of order that's actually entered, right? So instead of us entering a limit where we say, this is the order, execute it immediately if it meets this price, we're saying only at the trigger price can you enter the order that I want. So let's take an example. Let's say I bought Bitcoin at 21,000 and we're trading up at 21,180. So my trigger price for a take profit would be a sell order, and my trigger price, let's say 22,000. So what I can do now is say at 22,000, enter the order as I tell you now. You can either enter a market order, so you don't choose the price, and then you can choose the amount of Bitcoin that you sell. So only at 22,000, enter a sell order at market for 1 BTC. Now, what price am I going to get? It may not be 22,000. It may be below 22,000 because at this price, the system is entering a market order. And so you're just getting whatever price is in the market at that time. It might be quite volatile around that time. Or you could actually put a limit order in and say, only at 22,000, do I want to enter a sell order at 22,000? So that's just matching it up. Or you could actually put that limit order higher at 23,000. You can do that as you want. So you can either do a limit or a market there. Now, like I said, if you're just selling above the current price, you may as well just use a limit order. You don't need a stop or conditional order there. As for the sell side as well, again, just choose a level that you want the price to trigger at. You're going to need a conditional or a stop order in this case. So you can choose the trigger price, which would be below your entry, right, taking a loss, and then the order price. If you put the order price above the trigger price, then you're not going to trade, because what's happening is you're waiting till the price gets down to 19 to put an order price in, or a limit of 19.5. The price is going to be underneath that, and so you wouldn't be able to trade at that point either. So either choose a market order here or a limit order around the same price, or either underneath this as well, so 18,850, something like that, to give your trade some breathing room, and then just choose the quantity. The first method of choosing where to place your stop loss is the percentage method, which we'll get onto now. Before we get onto that, if you do want to learn way more about trading, analyzing charts, how to put support and resistance lines on, how to look at candlesticks and trends, All of these videos in the Crypto Investor course are right here. Check that out via the link in the description. It's much more in-depth, so it might help you out. We'll look at the percentage method right here though. So this is very simply just a percentage away from the current price. So let's say I got in at 20,000. So how much would my stop loss be? Let's say at a max I want to lose 10%, so I'd times 20,000 by 0.9, which is 18,000. So I'd put 18,000 in here as my stop loss. That's very simple, and it gives you an amount in your head that you can kind of lose. The downside of the percentage method is it doesn't really take into account the market or any support and resistance lines, or where the market is. It's kind of arbitrary. It might be very simple, but most people will use other methods such as support and resistance and other types of indicators, which we'll get onto now. Another method is to use something known as ATR, which is average true range. You can get it on any pro trading system like Bybit, on Binance. You can go to indicators and then just search for ATR, average true range, and you can see this down at the bottom right here, which is this red line. This gives me a figure in dollars of how much the most it can move in a day is. Now this changes over time, but this is giving me a sense of the daily volatility of the asset that I'm trading, in this case BTC. It's telling me that the average true range of BTC in a day at the moment is around $536. In previous history, when it's more volatile, this can spike up to maybe $1,000. So this is telling me that on the average day, I should expect Bitcoin to move by around $600 or so. And so that is a normal volatility for BTC. So what I would do as a trader is look at the average true range at around $600 and say, well, if that is the daily range, maybe it can move, let's say, $750, $800 where I put my stop loss if I want it really tight, or if I want to let the trade breathe a bit, I can put a bit more in. So if my entry is 20,000, for example, I can say, well, let's give myself 1,000 breathing room, because the average true range is around 600. Let's say I want some breathing room on the side of that. And so my average true range indicators telling me that around 19,000 would be a good stop loss, where the trade is probably moving more volatile to the downside than it usually does. So I can use the average true range to get a dollar figure that I can put my stop loss in at. The next method would be using support and resistance levels on the chart to indicate where you should maybe take profits or get out if the trade is moving against you. This one is a little bit more complex. I'll show you simply. Support and resistance levels on the chart, as you can see, are areas where the trade congregates around. A lot of traders will use these very simply to give them price levels of where kind of bottom zones are and top zones are over the short term. So as you can see here, support and resistance really indicates areas where the price will bounce off of, either when it's coming to the downside or the upside. So you can see this price area where the price bounced once, it then consolidated a lot around here, it then got rejected here, and then on this occasion you can see that actually kind of consolidates and then breaks through. So what traders will do is obviously see this area as a very strong support and resistance level. When you're below this, it's acting as resistance, and when you're above it, it's acting as support, coming down and bouncing off support, coming up and bouncing off resistance. So as we break through this resistance line, many traders will say, right, I'm going to go long for a breakout trade. And what they can say is, well, where am I going to take my take profit here? They'll look on the chart for previous levels of support and resistance, and you can see that here. You can see a lot of resistance and support, a lot of resistance and support here. This is resistance here. And guess what? We've traded resistance again here. Why is that? Because short-term traders are using support and resistance to enter buy and sell orders. We broke through here, and then a lot of traders will be taking their take profit levels right up here, which is why we've consolidated right here. So what you can do is use these levels on the chart. You can plot them very easily, as you can see right here. And you can say, if I'm going long at this level at 18.4, I'm going to take a take profit order, so a stop limit, get my price in at, let's say, this price, so 21,100, sell the amount of BTC in here like this, and then you can put that as a take profit order. If you're long, you can sell short, or if you're trading in the spot market, you can just sell. So that's support and resistance. It's a little bit complex. I go through it a lot more in the crypto course, so if you're looking to get a bit more in-depth. A lot of videos in there will help you. You may have also seen trailing stop orders, which are a way of protecting profits on the upside. This is how they work. You can set a sell order when you're in profit at a certain percentage away of the level that you're trading at, and it will move up with the profits of the order, but it won't move back down. So let's say you get in at 98 and the trade moves up to 99. You can now put in a trailing stop order to say, I want to sell at 2% away from this price, like this. Now, if the price moves up again, let's say the price moves up 10%, this trailing stop will move up the exact same amount of 10%. It will always be 2% away on the upside. As soon as the price starts moving back down again, this trailing stop order will not move down. So it's always 2% away on the upside. As soon as the price starts moving down, it will stop right there and essentially sell out and take the profits. This is used in fairly volatile markets where you think the price may move up quite violently, but also may dump, when it gets there. So what you can do is go to your trading system and look for trailing stop order. I'm using Binance right here, as you can see. So you use a trailing stop. Now, as you can see, you have an activation price and a callback rate, as they call it. The callback rate is how many percent away from the actual price do you want this sell order to be? The closer it is, the more chance you have of getting stopped out. So 1%, if it moves 1% down, you get stopped out straight away. You can also choose 5%, 2%, whatever you would want. Maybe look at the ATR, support resistance there, and the volatility. Now what you can see is the activation price. If I set an activation price under the current price, you can see I can't sell short or take profits. So if you're in a long position, this is obviously protecting profits to the downside. You'll notice that I can't put this order in. Let's say I went long 1 BTC. I'd obviously want to sell out 1 BTC. I can't put it in now because the activation price is under the current price, and that just doesn't work because I'm actually taking profits from this, right? So that doesn't work. You have to put this activation price in, as you can see, to 1190. I can do it now because it's just above the actual price right here. So if you want a stop loss, you can see it's not activated again because the real price has gone above my activation price. So your activation price has to be, I'll put 200 here, or 22,000, you can see. Now it goes. So as long as the activation price is above the current price, then and let's say 2%, this trading stop loss will be triggered with a 2% downside from that order entry. And then you can sell short or just take your profits from your long with the amount that you want to trade. Very, very important tip as well if you're trying to put stop loss and take profit orders in the spot market. If you're trading in the futures market, then you can put all of these in, no problem. If you're trading in the spot market where you have to own the assets, then you can't put a take profit and a stop loss in at the same time. It just won't work, and here's why. Let's say you own BTC at 98 and you've got $10,000. The spot market is cash settled, meaning you cannot trade any assets that you don't physically own. If you put a stop loss order in at 96, which you can do for $10,000 of BTC, you now have an IOU for that order, because this is taking your actual assets right here and tying them up into a sell order. So you're saying if that price is triggered, here are the assets that I physically own that I have tied up in this order that I am going to actually give over and sell. So when you try and put a take profit in, you actually have no assets at this point because all of your assets are tied up in the sell order to the downside. So you can't put a take profit and a stop loss in for more than you have in the spot market because you need to physically settle it. So you can only put one of these in and tie up your assets in one order. You can't tie up more assets than you have, because if you did this, this would actually be tying up $20,000 worth, where you only actually have 10 to settle. So that's why you can't do that in the spot market. Check out the Crypto Investor course if you want to learn way more about trading. Also, the deposit bonuses down there in the description as well. I'm James with Money's EG. Cheers for watching, and I'll see you in the next one.